If you know what I know about the stock market, a lot of people will become millionaires because they knew about putting a direct debit into something that will average them 10%, and it's just a matter of time. In 25 years time, there won't be a 1%, it will be a 40%.
Now, property versus, say, the stock market, what is the difference, and what are some of the ways that people can think about investing in property?
You can actually buy property via the stock market.
Please explain how.
How many minutes do you think you need per week or per month to invest in the S&P 500? 0.
Today we have Debodun of Stock Pickers Academy on, and I feel like this is going to be one of the most influential financial conversations that you guys who are part of my community and myself have had. And I really wanted us to get together and have this conversation based on my own selfish needs. A couple of nights ago, I literally called him up and I was like, I need to work out how I could be making my money work better for me. And I feel like I'm someone who is good with money. And we sat down and had a conversation into the night. And as we did this, I realized this conversation needs to hit public platforms to help the everyday person. Some of it might go over people's heads, but I know this is going to hit the right audience because conversations like this are needed. So if you are not subscribed, this is the time to subscribe, and you're going to want to share this episode with everybody you know who genuinely cares about building and maintaining their wealth, particularly in the times we are at today. So thank you for coming on. How are you doing today?
I'm good, thanks. Thanks for having me as well.
Yeah, no, and obviously the other night we were together and I had this light bulb moment and I was like, yeah, let's do this.
Yeah.
You're not a content creator normally. This isn't
Trying
what
to
you
be.
actually do.
Exactly.
But give me a bit of background of where you've come from and why you have this knowledge before we actually get into it.
Okay, so I grew up in Peckham, humble beginnings. I was very intelligent. I was what you call like a child genius, but I also had behavior problems.
Sure.
And that actually led to me being moved up a year in school. And I did well academically, left primary school, went to secondary school. I got the best GCSEs my school history has ever had. And that led to me actually getting a full scholarship to study at the City of London School.
Yeah.
I did 6 A levels. I got all A's, went to Warwick, did maths, ended up doing a few summer internships in the city in trading. I realized I wanted to be a trader very early on because in between sixth form and first year of uni, I did this program with an organization called The Brokerage where I did a middle office internship at HSBC. And then they showed me the trading floor and I was like, yeah, that's me.
Yeah.
And I was the youngest trader to start at Goldman Sachs at the age of 20 after graduating. And I was given nearly $8 billion to manage after 6 months. And that journey of working in the city, I did that for 12 years at various different institutions, the last one being a quantitative hedge fund. So what they do is they build algos to trade the markets. Along that journey, 6 years in, I realized I'd never checked my pension. I didn't know what stocks and shares ISA was. And I never really knew how to use the markets to manage my own finances, even though I was doing that for the bank.
Yeah.
So when I moved my Goldman pension to a SIP, a self-invested pension plan at Hargreaves Lansdowne, I had a group of professionals that worked in the city on WhatsApp. And I said, does anyone else do this? And they were like, no. Okay, I'm going to be your guinea pig. So for 6 to 7 years, they watched me very, very slowly 10x my pension.
Yeah.
And then shout out Kwaku, one of my friends, he said, you know what? You need to have a bigger WhatsApp group and just invite other people. So I did that. And within like 2 months, it was full, 250 people. And I was like, okay, that wasn't the plan, but we're here. By the time lockdown hit, so Stock Pickers Academy was never meant to be a business. It was just meant to be me giving back. By the time we hit the pandemic, the stock market crashed. The bottom happened on my birthday. I sent a massive voice note out. I said, if you're in this group and you've never paid attention or you don't know how to start, this is the moment, because the probability that you can make very healthy gains without much risk, this is a time period that happens once every 10 to 11 years. And so it was a massive call to action on my birthday. And a lot of people got in. Some people had been doing things the wrong way. So I became their portfolio doctor. They said there's an app called Zoom. And then from there, I started looking at people's portfolios. They got results. And People that were new, I realized I had to give them a strategy. How do I get a bus driver investing with what I know? So I said, we need a watch list of all the stocks that's real time.
Yeah.
I need a strategy they can apply. I need to bring my personal network to them in a WhatsApp group. And then I need to be there for them. So they need access to me on a regular basis. And that was the basis of which Stock Pickers Academy actually started.
Amazing. So taking it back, and this is the exact experience that I had. So I worked in the city. I was an accountant. You'd assume I would be good with money. You'd assume I would know how to invest. You'd assume I know what I'm doing until I get fined by the government for not paying taxes. By the time I realize I don't have a pension and I don't know how to make it work, and I realize I've got money, but I'm not investing, and actually I'm losing money every single day, which is actually what the everyday person is actually currently facing. And this is why I felt like this episode is so important, because there are the bus drivers and the hairdressers and the everyday individual who's starting to make some money now, but really from financial information is not shared, and people don't know what they should actually be doing to make their money work for them so that they don't have to work as hard. And I think this is what we really need to kind of cover. So what I wanted to get from your experience and your side is, what is one of the number one mistakes people are currently making when it comes to their money today?
Education.
Okay.
A lot of people, for whatever reason, there's a stigma against learning. I think it stems from imposter syndrome. This isn't for me. I'm not a finance person. I don't work in a city. So the biggest mistake is a lot of people try before they learn. And the market is a very expensive teacher. You will end up paying way more than actually if you paid for a course, £500, £1,000. I've seen people with portfolios, 10K losing 6K. And just a bit of education might not have saved all the loss, but it would have minimized maybe 5K of that.
So you're saying that people should actually learn about how to manage their finances.
Yes.
But I think what I find is that finances feels very intense and very boring and very complicated. And even when I reached out to you, I'm like, I know about finances. I just want to make my money work smarter for me. Can you do it for me, or can someone do it for me? And like, I don't want to think about that. And I think that's what the everyday person feels like. They almost want to close their eyes and be like, forget thinking about it. How are you working on trying to change that perspective?
Yeah, the mindset shift is so important. To put things in perspective, the government, to incentivize people to invest in the stock market, has created what's called a stocks and shares ISA, which enables you to invest in the stock market using that special account and not need to pay taxes on any profits you make. Despite that, only 3% of people in the entire UK had a stocks and shares ISA in 2019.
Yeah.
That number has risen to about 6-7%. And some of that is because there's been an influx in the number of people talking about money online, different social media platforms, TikTok and Instagram. But what I'm personally doing is, I think you just have to start small, get the message out. And when people start seeing results and seeing how it's changing their lives, they will then spread that message. And there's a domino effect. And I've seen that even having conversations with you. I'm a big fan of networking. I'm a big fan of getting to know people, influential people, celebrities, everyday people. And when you do that, when you reach out to people that have big platforms and you connect with them on a genuine level, then I can influence the influencers. I can influence the people that can then go out and either put me in places where the knowledge can be shared to more people, or do it themselves.
Yeah. Right. So take this back. I want the everyday person to understand this. What does investing actually mean? What are they actually doing?
I'm going to start with inflation.
Okay.
Inflation is a silent killer of wealth. If inflation is 10% and you have £1,000 in your account, by the end of a year, that £1,000 is like 900. It will still say £1,000, but outside has become expensive by a factor that reduces the power of what that £1,000 can do. So it's really like having £900. And once you understand that, you realize that your cash savings are going down. A lot of people have a bad habit of hoarding cash. Now, investing is the medicine. Investing is all about how you can get a better return on your capital.
Yeah.
The purest form of investing is leaving money in the bank. However, the interest rate that you get paid, when you compare it to the inflation rate, you're actually net losing.
Yeah.
When you invest, the objective is to outperform leaving your money in the bank. So to do better than leaving your money in the bank. And there are lots of different ways to do that.
Yeah.
There's high interest savings account. There's a stock market,
Property,
art, name it. But a lot of people don't have the education for each asset class. I'd say most people understand property,
Yeah.
right?
You buy
They
a
save
house.
up blind.
Yeah.
They go to the estate agent and they've got their 50K and they're learning about stamp duty for the first time. There's so much trust and confidence in that asset class that's all they need to do.
And break this down further. So asset class is a type of product you can put your money into that will provide you a return. Yeah. So property is an asset class. Gold is an asset class. Is that an asset
Commodities.
class? Oh, that's commodities.
So that will have gold, silver, oil, grains. And by grains, I mean wheat. And it's massive.
Art is an asset class, or is that a commodity as well?
I think the way they do it is they call it alternative assets as an asset class.
Yeah.
And that's where art comes into it.
Yeah.
Wine and some other things as well.
And then, of course, the stock market is another asset class. And is crypto within that as an asset class?
No, so crypto has now become its own asset class.
Right. Okay, fabulous. So now that's the basics. The reason why people should and need to be investing is because every penny in your bank account is actually losing money on a regular basis as the cost of living goes up and just inflation happens across the board. So you could have bought 10 eggs before for a certain amount and now you can only buy 8 eggs.
Yeah.
Yeah? Great. Love it. So now that this is the basics I want people to grab first as to why this is so important. And for some reason, this is not shared or taught to anybody in school.
Yeah.
Would you
know
agree?
why?
Why? Why do you
Okay,
think?
here's my theory. If you know what I know about the stock market, and we'll get into that, a lot of people will become millionaires. Imagine if everyone in the UK was a millionaire because they knew about putting a direct debit into something that will average them 10%. And it's just a matter of time. In 25 years' time, the percentage of people, there won't be a 1%. It will be a 40%.
Wow. Do you feel like the government doesn't want that to be a thing?
I can't see how it's good for the world, for everyone to be rich.
Which is why the concept of mainstream financial knowledge is actually quite difficult to grasp and sometimes so complicated for the everyday person unless they're willing to commit to learning more about it.
This is it.
Interesting. Well, anyone watching this or listening to this is hopefully going to make them part of the 8, 9, 10% who actually now begin investing in the stock market in the UK, but also on a global scale. Something you talked about was, we had this discussion. You mentioned the rule of 72. Do you mind expanding on that a little bit more? I feel like this really sets the scene before I actually get us to go into the detail on how people can actually begin investing. But what is this rule of 72?
I'm a mathematician and I love this rule. So the finance experts have come up with this rule to let you know how you can quickly calculate how long it will take for you to double your money at a certain interest rate.
Right.
So whether that's a loan that's paying you 5%, whether that's property that's yielding you 10%, the stock market where you're making 20%, what does that percentage mean? So it goes like this. If you take the number 72 and you divide it by an interest rate, let's use 10. 72 divided by 10 is 7.2. It will take you 7.2 years to double your money.
Right.
If you see anything out there, any asset that will return you 10%. Let's use 7%. You do 72 divided by 7. It's about 10. So it will take you 10 years to double your money if you see an asset that can return you 7% per year.
Does that also work the other way? So if inflation is at 7% or 10%, would it take you 7.2 years for your money to half?
Oh, you mean interest rates?
Interest rates,
Yeah.
there we go.
So the other way you can look at it is if you divide 72 by 10, it will let you know that you need a 7% interest rate to double your money over a 10-year period. So you can divide by the number of years to let you know what a good interest rate is to double your money.
Okay.
So it's all about either how long it takes you to double your money or what interest rate will help you to double your money with a given time frame in years.
Excellent. Those are figures that people can probably apply to things in their lives as it stands.
Yes.
Now, taking it back, what I really want people to feel is like, how do they begin? And a lot of this starts off with a bit of administration. So if I wanted to start, let's talk about not even property, the stock market. What do I need to do?
First of all, you need an investing platform.
Right.
I think the best one, if you're just starting out, is Trading 212. And the reason I've come to that conclusion is in my own community of over 4,000 people, most people use Trading 212.
Yeah.
So download the app. You can do that today. And then what are the key factors you should think about when choosing an app for people who don't want to do Trading 212 and actually want to do their own research? The first thing I care about is if I find a stock that I want to buy and I look for the search for the stock on the platform, is it there?
Yeah.
Availability of stocks. The other thing that I look for is if I hit the buy button on a stock, does it execute straight away or does it leave me on red, on pending?
Yeah.
That's called execution. Those two things for me are the most important. And it's why I use Hargreaves Lansdown. But they can do a bit of work to work on their UX and how it looks and the usability and so on and so forth. But Trading 212 also has something that's very interesting. It's a new thing. They will pay you 5.2% on cash that isn't even invested.
Okay. We need to discuss and explore this. So to explain, to begin investing, you need basically an account to put money into to buy the product, which is stocks from the stock exchange, S&P 500 or FTSE 100. We hate the FTSE 100, but we'll talk about this later. You need to actually have that platform to begin having transactions. And we are not affiliated with any platform in particular, but you've actually identified that some of these platforms are willing to give you a percentage for just having a balance on them. So if someone has, would you say they should use excess cash, or would you say that they should use as much money as they want to when it comes to investing?
Yeah, so I've got this process where I say you're earning from either a business or your job.
Yeah.
Take a percentage of your income and that becomes your savings. 30, 40% is all right. Now you've got a pool of savings. Now you take a percentage of your savings. I won't tell you I use 100%, but 30 to 40% again of your savings is a good amount for your investing pot.
Right.
And then once you have your investing pot and you have a bit of knowledge, that's not just property, you can then decide how you want to allocate that between stocks or crypto or property or art or whichever investments you want to choose.
Yeah.
So that's a good way to break it down so that your investments go down, which can happen sometimes. You're not now going into your bank account to look for it. And the other 60 or 50% is emergency cash.
Yeah.
In case you suddenly do have a cash need, which can happen. But some of that emergency cash, if not all of it, can literally be put into Trading 212, which doesn't have any restrictions on, it will pay you the 5.2% every day. But that doesn't mean you earn 5.2% each day. It means 5.2% divided by 365 times your balance is what you will get paid daily.
Okay.
So there's no lockup, unlike some of the cash ISA accounts or high interest savings account where they say you need to earn 4% if you leave it in there for quite a period of time.
Okay, perfect. And I want to expand on that more for the everyday person, in that you make your money via a job, via a business, or maybe some money that someone's given to you.
Yeah.
Nobody's ever saying when it comes to investing, especially if you're a beginner, is to put all your money into investments. And anybody who gives anyone that advice does not care about your well-being. But having your savings and then having a percentage of your savings invested is a wise way to make money on money that you already have.
Yes.
And of course, you want to have your emergency funds set aside as well in case anything happens in your life. But if you've got extra money, this is the money that you can actually start playing around with. I love the fact that you gave the example of this platform that gives you a percentage on your balances, but without those restrictions, where there are, certain bank accounts which will give you 4% return, but there might be a caveat that it has to be held for 1 year or something along the lines of that. So these are the decisions that people can actually make for themselves on realizing that if you have money, your money can actually be making money for you without you even have to do anything. So as a step number one, anyone listening or watching this, if you do have any extra money, look at what the options are out there. And even if you just want your money to sit in one of these cash opportunities, put your money down and get a return on it because it's doing better than what it would do just sitting in the bank. That's an actionable thing that people can do right now.
Yes.
So let's talk a little more about how Klarna works. You've probably seen it while shopping online, but did you know it's not just about splitting payments? Klarna offers you a choice of payment options, including Pay Now, which lets you pay upfront in full, or pay in 3, which helps you to spread the cost interest-free. And you can also choose to pay in 30 days, which can be helpful if you need to see the item before you make a decision, but you might not want to be out of pocket. What I love most about using Klarna is that they've got your back. For example, you can pause your payment if something goes wrong with your order, or extend your due date if you need more time. And of course, you can pay your balance in full at any time to help you stay on top of things. It's about giving you the freedom to shop smarter and not harder. If you want to know more about how Klarna works, head to klarna.com for more details. Just to know, borrowing irresponsibly may negatively impact your financial status. Pay in free and pay later are unregulated. Terms and conditions and late fees do apply. And borrowing irresponsibly may negatively impact your financial status and ability to obtain credit. So be smart. So they've got the platforms, they've taken their savings, a percentage of their savings, and now they've got cash. Where do people start? And a lot of the time, or a lot of the messaging out there is just buy an ETF or an index fund, or buy Apple stock or Tesla because that's what you like. What do you think about that as a strategy? And I know you don't like it.
No, I don't like it. So it's very easy on the ears to hear invest in companies that you use every day. Apple. You don't need to be watching this to know that Apple is a fantastic company, that Amazon is a fantastic company. But I'm going to start first with index funds.
Can you also break down what an index fund is? Because again, there may be people who don't know what an index fund is.
So every country in the world has a set of index funds. And then I'll tell you what an index fund is. So imagine you've got a pizza and the pizza has 10 slices.
Yeah.
And each slice represents a company.
Right.
In the UK. But let's assume the UK has 5,000 companies. So it's a massive pizza with 5,000 slices. But each slice is not the same size.
Right.
So a company like Shell or Tesco will have a bigger slice compared to some of the smaller companies like WPP.
Yeah.
But you can invest in the entire pizza without needing to buy all the individual slices separately. An index fund is exactly that, but with stocks. So imagine a stock is a fruit.
Yeah.
An index fund is like a smoothie. So when you want to learn how to pick individual stocks, that's called active investing.
Yes.
But an alternative to that is buying the smoothie.
Right.
And when you buy the smoothie, there's a way to do it. And that is direct debits. You're not just putting a big chunk on. You're literally just direct debits, hitting that smoothie every month. And the UK smoothie or pizza
Yes.
is known as the FTSE 100. It is the biggest 100.
We've had a big discussion about this, and we're going to nerd out about the FTSE 100
Yeah.
and why we think it's not ideal.
Yeah.
And I really am worried about saying anything bad about it. But yeah, it's the biggest 100 companies
Yeah.
in the UK that is listed.
Yes.
And so people can buy an index fund that allows you to purchase a little bit of every single one of these companies, right?
Yeah. If you go onto your platform and you search FTSE 100 and you see it, you just click it and you hit buy with the amount that you want to buy. And now you own a little bit of the UK.
Yeah.
Right? And it's like owning a tiny little bit of 100 companies, but it's the biggest 100 companies in the UK. And you can look at it a bit like, I'm going to use a football analogy.
Okay.
The Premier League
Yeah.
has 20 clubs. The FTSE 100 has 100 stocks.
Yes.
And the Championship is the next level down, and that's the FTSE 250. That's the next 250 biggest companies. And then you've got the FTSE 350, which is both of those combined, and the FTSE All Share, which is more and more. So there are lots of different index funds, but there's a headline one. And the UK's is the FTSE 100.
And
But
America's there.
yeah, I mean, the biggest one in the world and the most important in the world is the S&P 500, which is the biggest 500 stocks in America. Then you've got the NASDAQ 100, which is the biggest technology stocks. Right? So Apple will be in both the NASDAQ and in the S&P 500.
Right.
But the NASDAQ is your way to invest in a technology index fund. But I'm going to just focus on the S&P 500. It is the oldest. America runs the world. I have this phrase I like: if America sneezes, the whole world catches a cold.
Oh gosh, I don't know how I feel about that, but we're right, especially in the world of finance. Yeah.
They were the first one to come up with the stock market. So their index fund is not just a headline for America, but it's a headline in the whole world. So if there's a war, the S&P 500 will fall in value, and then all the other index funds will fall in value because the S&P 500 fell in value. There's a correlation. Why do I like the S&P 500 so much? Some companies pay a dividend, and I'm going to touch on this first very quickly. So a dividend is a company saying, we've got so much cash in the bank, we don't want you to sell the shares in our company, so let's pay you a little payment. And it's not much, but it is sometimes quite big from a percentage point of view. Hold that thought. So the S&P 500, there's 100 years worth of data to support that if you've been investing in this monthly for the past 100 years, your average annual return is about 10%.
Right.
Now, that doesn't mean you make 10% every year. That could be, last year it did 25%.
Wow.
Yeah.
So if you invested last year, you would have made 25% on the money that you put in.
Yeah.
Insane.
But here's the best thing. How many minutes do you think you need per week or per month to invest in the S&P 500? 0. Once you set it up and you set up your direct debits, you don't need to keep up with markets.
Yeah.
You don't need to open your trading platform to check if it's gone up and down. History has shown, with the most confidence in financial markets, that you will average about 9 to 10%.
And that means in 7.2 years, I can double my money
Hey!
with the rule of 72.
Hey!
There we go. Yeah.
Now, that sounds boring,
Right.
but this is what I call the bare minimum. The absolute bare minimum that every single person should be doing. Controversially, I will go as far as to say, even if you don't have savings, there's a tiny amount that you can afford and just treat it like a bill. Treat that payment like a bill. Imagine you got a parking ticket once a month.
Yeah.
That's £40.
Yeah.
And you have to pay it. If energy bills go up, regardless of your financial status, you have to find the money.
Yeah. Yeah.
Right? If you treat index fund investing in the S&P 500 the same way, with the same energy that I have to pay it, over a period of time, I'm going to give you some numbers.
Okay. Go on.
So let's say you started with £1,000 and you did £100 a month.
Yes.
In 25 years, you're on about 135k passively, 0 minutes a month.
Wow.
Guaranteed. And I say guaranteed because in the world of statistics, 100 years of data to support it. It survived world wars. It survived the depression. In fact, look at the times we're in today.
Yeah.
High inflation, cost of living crisis.
Yeah.
The world is in
COVID.
the world is not in a great place. The S&P 500 hit its historical high. The highest level has been in history this month.
I feel like we burst into laughter about this. Like, damn, why didn't I put any money in the S&P 500?
It's resilient.
Yes.
It survives hard times, right? So it is the bare minimum that everyone should be doing.
Yeah. So open an account. Get an index fund and invest in the S&P 500.
Get the specific index fund, S&P 500.
Only.
Yeah, on Trading 212, the ticker for it is VUAG.
Oh my gosh, this is so good. Obviously, this is easy for you, but you even saying the word ticker, a lot of people don't understand what that means. So this is the reference.
It's what you type in a search engine.
To purchase the product, right? Yeah. You want that. I didn't even know that was the ticker. That is what I'm doing tonight. I do have an index fund. I have purchased some, but I feel like I've also got Japanese stock and a whole bunch of other stuff as well.
So the Japanese index fund is called the Nikkei. And that has actually been the go-to index fund for people who know what they're doing.
Yeah.
But we don't have 100 years of data on that.
Right.
And some of these will do better than the S&P 500. So your S&P 500 is like learning first aid.
Yeah.
And then the other stuff, which is still passive and hands-free, is like being a nurse.
Okay.
And then picking stocks is like maybe being a GP. And then day trading, which I'm not going to talk about, is like being a surgeon.
Right. Yes. Okay. Fab.
But everyone should learn first aid.
I love this analogy. It's great. It's fabulous. Great. So people get their platform, they buy a piece of the S&P 500.
Every month, direct
debit. And then what next? Because a lot of people get caught up in the fancy idea of, I've got Tesla or I've got this. There's another stock that everyone's talking about right now. Nvidia. Yeah. Let's break this down. What does it mean to now pick individual stocks based on the fact that you like it?
So last year, the S&P 500 did 25% return. But that was mainly from the 7 biggest stocks.
So which ones?
Microsoft, Apple, Google, Amazon, Meta, Nvidia, Tesla. Those were like the ones that, because they performed so well. Yeah. And I'll talk about Meta. So on my watch list, I had the target price of 100 when it was at 300, and people were like, it's never going to get there. It's like, if it doesn't get there, you never buy it. Simple. You find something else. But if it does get there,
buy it 100.
The sun is shining, make hay. So it's 500 today. It's done 5x. And Meta is WhatsApp. Meta is Instagram. We're using these applications every day. And they can be paying for your bills.
Wow, for real. I love that.
Before we go on, I guess the difference between picking stocks versus index fund is it does take a bit more of your time. The way I teach it, it should only be like 30 minutes a week, which is like 5-10 minutes a day. I've simplified it. I've made it easy to digest and how to pick the stocks and all of that. But what are the advantages? The advantages are you can literally not get 10%. You could get 50% on your portfolio in a year, 100%. 2020, 2021, most of my clients at least got 150% entire return on their portfolio because they actually started with picking stocks. I've just gone back to say, hang on a second, does everyone even know about the S&P 500 and the fact that you should be doing that as a bare minimum? So I've gone back there and made sure. So uninvested cash goes into S&P 500. But for people who are still brand new and don't know what to do to start, uninvested cash can at least sit in Trading 212 getting 5.2%. I was going to talk about the numbers.
Right, please do.
I gave you the example of 135K if you start with £1,000 and did £100 a month. But let's say you don't have a £1,000 to start with. That's just 10 months of £100 a month.
Wow. Yeah.
So either way, it just means one person has a 1-year head start on someone else. So you still end up, if you just start with £100 a month, with maybe 120K over a 25-year period. And I like the time 25 years because that's around the same time as a mortgage. So it's comparable. But if you start with 5K with no monthly deposits. In 25 years, that 5K would have grown to about 180 grand. Imagine if everyone did that for their child, and it's tax-free.
How is it tax-free?
If you do it in a stocks and shares ISA, the government does not tax you on your profits.
Right.
But there is a catch.
Okay.
The maximum you can put into a stocks and shares ISA each tax year
Is 20K.
is 20K.
So they still want to limit how much money you're actually able to make a return on. But if something crazy was happening in the market, you could still make that 20K.
Yeah, it can grow.
400K or something like that.
Well,
that would be something super
we need 2020
crazy.
to happen again. Because
we don't want that to happen again. But
we don't.
Yeah.
But
so I always think it's quite scary for individuals to pick stocks. Would you agree that, you know, it's not for everyone? Because there's a lot of information. And I used to see a lot of people saying, you need Forex, you need this, you need that. And I'm like, you don't even know what you're talking about. And it feels sometimes that there's a lot of nonsense out there. And actually not everyone should be picking stocks.
not everyone should be picking stocks 100%. And stocks can be scary. But that's not to put you off, it's to make you understand. I'd rather tell you stocks are scary so that you understand the risk involved than to paint a wonderful picture. My job is to make it less scary and to make sure that you know what you're doing when you pick stocks and you do it in the right way. A lot of the books out there are not written for someone with 5 grand in their account or 10 grand in their account. They're written for someone like me who wanted to be a trader professionally for a bank.
Yeah.
The way you invest when you're in an investment banking environment on a trading floor is completely different to the way that you invest when it's your own money. We have what we call leverage, which means a 10% move on a stock is making me a lot of money in the bank.
Yeah.
My strategy is completely different when I've got £1,000 and a 10% move is making me £100. I'm trying to get 50% moves at 80% moves. So the type of stock I pick has to be different. It can't just be the top ones up there that, like Apple, that hasn't done anything in 3 years. Each stock has behavior, just like human beings. Some stocks lose their temper every day. Some stocks lose their temper every year, once. Some stocks lose their temper a lot, but they don't get too angry.
Right.
Some stocks get very angry. And I'm just explaining the wild swings that you can get in the stock market. But if you have good risk management, because you can pick a fantastic stock and lose money.
Right.
Like Apple, like Amazon.
Has that happened?
Yes, there's some people who've lost money on Tesla, lost money on Apple, lost money on, I mean, you can lose money on any stock, but a stock being a great company is not enough to guarantee you a return.
What can people do to guarantee a return? Is there such a thing as guaranteed returns when investing?
Yes, S&P 500. It's the only thing I can vouch for that will guarantee you a return in the stock market. When you pick individual stocks, I think of things in terms of probabilities and decision making. Outcome will sort itself out. If you consistently make good decisions over time, you should expect to, well, with the strategy that I use, and to put things in perspective, why I back the strategy that I use is because it's cautious. It comes from me working market making. So market making is like, I'm William Hill, right? And you're coming in to bet at William Hill, but I'm the system.
Right.
I did that professionally in my career, which meant that I was forced to learn how to manage risk and strategize around volatility. And then I've worked with algorithms that take emotion out of the equation. And they say, this is it. It can be selling a really good stock, but it's selling that stock just to reduce its exposure to China, not because it doesn't think that stock won't go up. And that's where you have factors. So there's volatility, there is country, there is the size of the company. Is it a big company or a small company? There's the age of a company. Is it a recent IPO or is it NOG, as I call it?
Yeah.
Right. So there's nearly 20 different factors in which you can diversify. And ultimately, if you can pick what I call an optimal portfolio, which tries to get the best out of all the different ways to diversify, and you can do that without using 50% of your capital, and that's just there as a backdrop in case prices drop, then over time, I mean, I've been using this system for nearly 10 years and my average return is like 29% on the dot. And I'm teaching this in a way that people can understand. So You can actually do two strategies at once. You can do the S&P 500 running, and then you can have another pool of capital and say, I'm using this for picking stocks, and another one for crypto, and another one for property.
And I feel like this is when people now become more varied when it comes to investing. And most people still, as we said, only 7% of people in the UK even have a stocks and shares ISA.
Crazy.
So they're not even doing the basics there. So what I want is people to be able to do the basics and then get some of their other questions answered. So let's talk about property, because I know that this is a big area that most people are comfortable in.
Yeah.
I, for one, have a big property portfolio. This is where I've invested. Now, property versus, say, the stock market, what is the difference, and what are some of the ways that people can think about investing in property? And I have some thoughts on that as well.
Okay. You can actually buy property via the stock market.
Please explain how. I know how, but let them know.
There's something called a REIT.
Yes.
REIT, Real
Correct.
Estate Investment Trust. And the same way you can buy an index fund, they literally the same thing. You search for the type of REIT, you can own a bit of Westfield.
Ooh, that's commercial property, but
Commercial property. So there's something called UNBLF. They own the property that Westfield shops pay rent to.
Right.
And you can own a share of that property company and get a percentage of the rent. REITs are forced to pay a certain percentage of their rent back to the owners.
Wow.
So
In the form of a dividend?
in the form of a dividend.
Okay.
But it's really that dividend is coming from a percentage of the rent.
Wow.
The benefit of REITs is if you feel like there'll be a massive demand for a certain type of commercial property, then the price of that REIT will go up and you're getting the dividend. So what I do is I have all the REITs on my real-time watch list. I've set my target entry prices that are very, very impossible, but some of them get hit.
Yeah.
And when they get hit,
You have an alert.
yeah, this one has done 50% in 6 months and it's still going to pay a 7% dividend.
Wow. Okay. That's REITs. REITs, again, is still like buying a product
Stocks,
on
yeah.
stock, right? It is stock at the end of the day. Now let's get into most people thinking that their home is an investment. And I always had this argument is your own home that you have to live in can never be an investment, because you have to live there. You're gaining benefit from there unless you're renting out a room. A lot of people hope and pray that their home's going to go up in value and then, it's going to double and then they're going to make money. But that isn't really the case. What is your view on property as in brick and mortar as an investment model, and how can people get into it where it's not a risk to them?
The house you live in, so property as an industry, the average in which properties grow in the UK is about 6%. And what does 6% mean? Rule of 72.
You will double your money in probably 12 years?
12 years.
Yeah.
So if you buy a house, you should expect to double your money every 12 years. So it is an investment theoretically.
Right.
However, is it the most optimal investment to double your money every 12 years? The key thing is to understand the position you're in. For me, I think financial literacy is being equipped to make the optimal choices.
Right.
At least you had the choice.
Yeah.
I think there's a level where it becomes a personal decision, but you don't want to make a personal decision without the choice.
Right.
You want to see your options and then be educated on your options and then make a choice. That for me is efficiency. So I think at some point everyone's going to buy a home to live in.
Yeah, or would like to. I think that actually the levels of home ownership are going down because it seems to be out of most people's path.
Okay, I hope they get promoted more in work or they win the lottery or their pockets get more and they can buy what they can afford and what they want to have.
Sure.
But property is an investment, but there are things you can do in property as well. Like I paid £500 for a course.
Right, okay.
Reluctantly.
Yeah.
Right? Today that course is 10 grand.
Wow.
But when I did the course, it was a 2-day 9 to 5 course going through every single property strategy. I got value for money.
Right.
Even if you look at the time, the hours, and you just divide it by the £500, it was good value for money.
Sure, yeah.
And the thing that always catches my eye is how you can make money without spending any money from scratch, without having any money. So I'll give you some game. This one is called matchmaking. So you can go to property auctions, look out for who's bidding, who's fighting.
Yeah.
bidding, paying over the odds for a property. That person has money.
Right.
Go up to them, tell them that you can find below market value properties for them, and that's what you do.
Yeah.
Right? Even if that's not what you do. To
Right.
land your first deal, you have to act like you belong. That's what you do. Get their details, their phone number, email address, and start building up a whole list of investors.
Mm-hmm.
So you find investors. That's the easiest way to find property investors. Then what do you do on the other side? You need to find people who might be desperate to sell their house. And it could be for several reasons. Maybe they've had a divorce. Maybe their kids have moved out and they're looking to relocate into a smaller house. Maybe there's been a will and the kids just want to split up the property. Maybe they've got financial difficulty. There's so many reasons why someone might want to be a distressed seller. Create a leaflet. We buy any house cash.
Yeah, right.
You've seen them around?
Yeah, I have
Then you
seen
know
them. I
that,
receive
okay,
those actually once in a while.
There's a reason.
Right.
So you stick those around. Those are lead magnets
Okay.
to find potential.
Okay. So that's for someone who wants to
Make
build a
money in
business
property
for making money in property.
without having money.
What about the people who want to, like, they're like, I'm going to buy a house and I'm going to rent it out. Is that a good strategy?
Yeah.
I think a lot of the time it's again about thinking about the numbers in terms of if you have a mortgage, what's the cost of that mortgage and how are you going to afford the house in the long run?
So there are many strategies in property. There's buy to let, there's buy to refurbish, do it up, refinance it, get the equity out, repay back your investors. There's buying to do Airbnb, serviced accommodation. These are all very, very credible strategies. The key thing is to understand the regulations around each of them and to be tax efficient. So is it better to buy these properties through a company and then do your service accommodation? And then making sure that you do your research to make sure you're buying in the right area for the strategy that you're doing. Check occupancy. There might be a certain area in London where if you buy and you do Airbnb on the property, you can literally get 75% occupancy, or maybe in the summer it's 100%, but that pays for everything else. The key thing is doing research and making sure that you have mentors.
Yeah.
You see, education, what we're doing here is education. Mentoring is very different. Education is reading books about how to keep fit. Mentoring is having a personal trainer. And you need both. And it's very important to find people who are already doing what it is you're trying to do, whether that's stocks, whether that's property. The big difference between stocks and property, stocks is proven to get you, even in a passive way, a higher return, 10%, than property yields, which is 6%, and then you'll pay taxes on property.
What are some of the craziest things that you've seen, mistakes, losses from people who you have trained and worked with in the kind of investing industry?
Human beings have the tendency to want to experiment. So they see, I can make 50% in a year, and they start doing numbers in their head and they break the rules. So part of the journey being an investor is sometimes you will break the rules. Sometimes even I experiment. And the key thing I always say to my clients is, whenever I think of a habit that could be negative that my client could potentially do, I've got the foresight. So I say, listen, I know you like these quick wins.
Yeah.
When you invest properly, it's boring. I might buy a stock in January. I might buy a bit more in November. It might do nothing for another 6 months.
Wow.
And then it might go down further. And then it might then eventually yield a profit 2.5 years later. I might buy another stock that I'm happy to wait and earn 100% in 3 years. And it triples in 2 weeks. I sell. I've got this golden rule in my group. Tell me before you do anything with your money. Whether you're buying a house, whether you're buying crypto, whether you're buying stocks, even if you've done my course, let me know. Bring me in to your journey. So then I can mentor you as efficiently as possible. Because some news may have come out. There might be a new thing that I might say, listen, we're avoiding any stocks related to China right now because it just doesn't make sense. It's just heightened unnecessary risk. And the stock might be on an alert. And it will always alert, but I'm teaching you decision making. If 3 things are alerting, Twitter, Snapchat, Meta, you can't buy all 3. Prioritize the one that's bigger.
Right.
Meta. right? On a market cap level. And market cap is just how big the company is in the currency that it's listed in.
Fair enough. I feel like the concept of like trading and picking stocks can actually become quite addictive and gamifying. I know you said that you're obsessed, right? This is
I'm
what you
obsessed.
do, right? How does the everyday person who's not obsessed, just wants to make a little bit of extra money, go about looking at this?
Okay, the bare minimum, S&P 500.
Yeah.
But the way I've designed my strategy, so I've taken Goldman Sachs, I've taken the hedge fund I worked in, I've Barclays, where I did treasury repo. I've taken how I've seen money made in all those different environments, and I've created a strategy that optimizes, takes the best out of each one in such a way, because we're using a shared watch list that's real time, because we're all in the same group, because my past bosses are in that group, my past work colleagues are in that group, even people from other different, I've got so many experts in the group that it's like a due diligence machine. So when you buy something and it's in your portfolio, don't buy too many stocks. That's another big mistake.
Oh, really? Okay.
This is the killer.
Explain what people buying a lot of
So
things.
I just wanted to start small.
Right.
£1,000. I wanted to start small. So I bought £20 of Tesco, £20 of Apple.
And they bought 100 stocks and they're confused.
You can't track 100 stocks. Just buy an index.
Right.
I can't track 100 stocks, which is why I've made more money from my own group by putting together so many people. That gives me visibility on the opportunities I would have not had time to even know they were happening. Whereas when you've got a group of people, it's like, oh, by the way, I was looking at this stock. Something seems to be happening. Okay, put it through in. Okay, yeah, there is an opportunity. I can't get involved because I've got my hands tied. I've got my 4 or 5 stocks and that's it. But it is a very good opportunity.
Right. Okay.
So investing is a team sport.
right.
The other mistake people make is trying to self-learn and go it alone.
Okay.
I'm a student, even though I'm a coach. I'm a student of the game and I don't buy anything without telling my group.
Yeah. So I'm hearing one, like people being too hasty,
Yeah.
not making informed decisions and doing it independently would be some of the bigger mistakes that people can make when it comes to investing. And I actually think that applies across the board, maybe as a life principle in general.
Bring people along. And I get it. It's trust. And sometimes people don't always have your best interests at heart and people are quite protective of their money. But when you bring people along with what you're doing, you get more information. And the person with the most information wins.
I love that. We actually wanted to discuss this because you brought this up. And I thought that you had a lot of men in your group and that guys would be the bigger investors. But you actually said that women are some of your biggest.
You said, where are the women?
Yeah. Like,
I
you
was
were
like, what do you mean?
You're like, women are some of the biggest investors in your
Yeah.
group today. And actually some of the more successful players. What is it about men versus women nowadays when it comes to money?
So I feel like a lot of women feel like they need to level up, that men know all this stuff. Men don't know it. Men don't know this stuff. Men are winging it.
Right, okay.
So women have good intuition. And I'm not generalizing here. This is just my observation. Women have good intuition and better money management skills than men. Whereas men have this go-getter, gamble, take risk.
Yeah, bigger risk takers.
They're
Yeah.
bigger risk takers. My best clients are actually the couples because you get the best out of both worlds and then they can be accountable saying, but Deb said this, Deb, you're doing... Accountability will make you more money than knowing what a good stock is.
Right.
Being accountable. Have someone that is making sure you don't make those mistakes, that you don't bend the rules, is going to make you more money. And that's why having a community and a coach is so important. It's not that there's not knowledge out there, because there is. It's what makes you consistent money in the long run is actually not breaking the rules.
Right.
It's actually having a strategy. It's actually bringing other people on the journey. But women have money.
We said this.
I didn't know this before.
Women have secret money in
Women
secret accounts.
have
You know, they're
money.
hiding it and they're not having to basically...
Shout out all the women and stock pickers.
Yeah. And they're also kind of not having to spend it as much, you said, because maybe men are having to spend a lot more.
Men do this thing where they overcompensate trying to prove that they're a provider. And what this means is they're paying for nursery, they're paying the bills, they're paying the mortgage, the traditional men out there anyway. And there's not much left. So they're trying to do rags to riches with what's left.
Right.
And then it goes wrong, because when you have that fast money mindset, you're literally going to have a car crash.
Right.
So men tend to come to me where they've tried things
And lost money.
and their portfolio is redder than stew.
Right.
Women, they make money. And then they come to me saying, oh, Debs, I made money, but I didn't think I knew what I was doing.
So they're
but
actually
you're
money.
50% up.
Wow.
So I thought, if I'm making money without knowing what I'm doing, if I pay for a course, then I'll make even more. That's the logic. But also the amounts, they come with way more than the men on average. 80% of my clients are women.
That is shocking. But also I think that times have changed where women are really trying to level up and know more about their finances and be informed, and they understand the power of community and are coming together to have these conversations,
women
which is
are
super
so
important.
good at bringing their friends.
Yeah.
Men don't bring their friends. That's something I've noticed. So women, can we do this as a group? Women are very, very good at referring other women to learn different things. Men, they're go-getters. They like to experiment, learn by themselves, and then post their amazing results. And I didn't know all of this before I started Stock Pickers. I didn't really see it. But then when you're behind the screen and you're seeing all of this, you're like, okay, you learn so much about society and the way people think and the mindsets. And maybe it's a genetic thing. Men had to go out there to hunt, and it's still that same mentality. You have to figure things out myself. Maybe men prefer to figure things out themselves, or to at least try to figure things out themselves before they get help. But it is improving. I have started to see a bit more men that haven't tried it, that are literally starting with education. But yes, an interesting.
What's one thing that they can do to become wealthier today outside of educating themselves?
Health is wealth.
Health. Okay, perfect.
Right. And in my community, I support people's careers. And if you're an entrepreneur, it's free advertising every weekend when the stock market is shut. I feel like we need generational health. This is passing on information about keeping fit, being healthy, herbal teas, all this kind of stuff. And then you've got generational careers, right? Ask yourself, who are you mentoring, right? If you just mentor one person, it could be a sibling, a friend sibling, just someone behind you on their trajectory, helping them pick GCSEs, helping them pick A-levels, helping them pick schools. This information is so critical to your career. And what does your career affect? Your income, right? You're about to lose your job. So many women and men, they suffer in silence. They're having issues at work. They're about to be quietly dismissed. They're being bullied, and they haven't told anyone.
Wow.
So last year alone was really bad, because a lot of people come to me on this stuff, and I've got employment lawyers to make sure that they're doing the right things, they're getting the right payouts, they get supported in the right way. But the amount of people that come to me after the fact, how can I help after the fact? You should have got a payout on that. But there's a fear, I'll be tarnished in my industry. No. The amount of people getting payouts and not being tarnished in the industry and continuing is high. Speak up. So that's why I've got the Coach Q WhatsApp group. So this is like any questions, careers, any struggles, applications, all this kind of stuff. So yeah, I feel taking your career seriously. As a business owner, do you have a mentor? There's mentors in my group. I will connect you. You'll pay them the fee that they charge, but get mentors in your career. Because I was actually a career mentor before I was an investor mentor.
Wow.
So I've helped over 1,000 people on getting into investment banking over the past 10 years.
Wow. Amazing.
And I barely made anything. But it wasn't about that. It's about when you're in a space where you see that I was a fly in a coconut ice cream on the trading floor. I was like one of 2 to 3 black people. So you have to do something. You've got responsibility, number 1, to do well in your career. And then number 2, to look back and say, how can I help this situation?
Well, thank you. I really feel like the insights you gave us was so valuable there. And I know you go into even more detail. I know you have your own company and there's stuff over there that even goes over my head as well, but you are trying to really help people on that. So I'll have your links in the description bar below. Where can people find you?
You can find me outside. No, I'm joking. But I do go to the whole, DLT, recess. When my business started, it was online. It was Clubhouse. It was.
What's your social handles?
No. I'm saying so the reason I go outside more in my brand is some of my clients have been with me for 3 years and they only meet in person for the first time at events. So yeah, you can actually catch me outside.
Okay, fine.
But other than that, there's Instagram, Man Like Debs or Stock Pickers Academy. And the link in my bio will take you to my free Telegram group and then my course and anything else that you want to do. On Twitter is Man Like Debs, but I don't really tweet that much.
Yeah.
But yeah, the main place is Stock Pickers Academy on Instagram, and follow me on LinkedIn so you can connect on a career level with other people in my group. We've got a page there, Debodun Osekita.
Put that link there.
Yeah.
Well, thank you very much for coming on today. I appreciate it.
It's been a pleasure.